Welcome to the Tech for Good podcast with Bethnal Green Ventures. My name is Dama Satyanathan, partner at Bethnal Green Ventures, and I'm delighted to be joined today by Camilla, who's the managing partner at Eka Ventures. Hi, Camilla.
Hi, Dama. Thank you for having me. Really excited to be here on this sunny Monday.
Sunny indeed, exceptionally sunny for London as well, which is super exciting. Thank you so much for joining at such short notice as well, particularly because it comes off the back of the exciting announcement of Eka's second fund. So congratulations.
Thank you. We're really excited. Couldn't be happier to have $107 million ready to invest in fantastic founders in the tech for good space.
Amazing. Yeah. Just briefly, before we dive deeper into sort of Eka's thesis as well, and I'm also hoping I'm pronouncing the name of the fund correctly, so we can possibly also go into the etymology of the word in and of itself. But tell us a bit more about yourself, Camilla. What actually led you into venture capital to begin with?
Definitely. Well, I wish I could say that it was something that when I was sort of born, I had this idea of going into venture capital, but that definitely was not the case. I was extremely fortunate to be in San Francisco with the consulting firm I was working for at the time called Bain & Company in 2012. And we had all of these amazing companies that were startups at the time, like Dropbox and Uber, come into the office. And I was like, wow, there's this thing called like super scaled entrepreneurship. And then there's a whole industry that finances it and helps those companies grow. This is definitely where I want to sort of spend the future of my sort of career. And there was really sort of 4 reasons for that. So one was just around entrepreneurship. I'd always been drawn to entrepreneurship. I was the first person in my family to go to university, so it definitely wasn't sort of default. And I had started buying and selling show jumping ponies at school. And so I sort of always had this like desire to do something in that space. The second thing was around like how I'd started to understand that finance and companies could really shape the future of the economy. Whilst I was at Bain, we did a lot of work around the Irish banking crisis. So saw firsthand what happened when a sort of system went wrong. And then on the other hand, when we were in San Francisco, I was surrounded by these people who were talking about how they wanted to build the future of the world, the future of the economy, businesses that their children would enjoy sort of using in the future. And I was like, well, if I'm dedicating my life to anything, I'd love to dedicate it in that direction. And then really the final piece was around the people. I was like, wow, like founders are just amazing. Like the rate of learning, the excellence, the obsession. I was like, I just really would love to have the opportunity to build a career where I was surrounded by people with that level of passion. So that was, I guess, sort of why. And then when I came back to the UK, I was extremely fortunate to be introduced to MMC Ventures, where I started my venture career, and John Coker, my current business partner, and he talked about wanting to build the UK's leading venture firm. At the time, the industry was extremely nascent. I think especially women in VC, there was a handful of maybe 10 of us, and so it was a very sort of different landscape to today. So joined MMC, spent a number of years there working in the direct-to-consumer space, backing companies like Gusto, Bloom and Wild, and a range of other companies, and then joined a sort of growth firm called Bird Principal Investments, also investing in sort of consumer, but Series B to pre-IPO, very sort of different experience, different style of investing. And that's where I learned about sort of community-led models. So Birdo was a big investor in Etsy. They're one of the biggest investors and shareholders in Vinted. And so really started to understand this philosophy of how community-led investing can drive these like huge outcomes and incredible defensibility, which really brought me to sort of setting up Eka with John. And we closed our first fund in 2021, focused on the sort of shared value thesis.
Amazing. Yeah. And you can see the sort of storyline of how it emerged into becoming Eka today as well, which is super exciting. Tell us a bit more about Eka's thesis then. I mean, personally also, I feel the premise of actually seeing early stage investing with the long-term view of systemic change or positive systemic change makes me personally really hopeful. So, but for our listeners today, what does that actually mean in practice? Yeah, tell us more about it.
Yeah, it's a great question. And I think we've definitely tried to explain this previously in ways that are probably too sort of theoretical. I think really sort of simply, and when we think about sort of impact investing, we think about investing in businesses that are improving how people live their daily lives. So that sort of affordable and accessible products and services. So how do you have fair insurance? How do you have fair financial services? How do you get access to legal services and education? And what's the technology that exists today that can truly make that personalized and accessible to everybody globally? So that's one mega theme, and we're like, there's just so much opportunity there. The second one is around healthcare. So when we look into the healthcare system, 10% of global GDP, that continues to rise every year. Trillions of dollars are spent in that space. Most of that is currently treatment-led. Majority of conditions could be prevented. So we're like, huge opportunity. Consumer technology is all around behavior change, getting people to change their behavior to interact with technology. So we're like, that could be used or applied to help people move from a treatment-led system to a preventative system. Runner, one of our portfolio companies, is a really great example of that. Running training app. We're sort of focused on helping people to learn to run, and then people that were already run to get better and improve over time. That business sort of scaled really exponentially in a short period of time. And then finally, sustainability. When you look into what we're buying every day, the supply chains that sit behind that are all extremely clunky and extremely wasteful. And there's just huge economic and environmental opportunity from cleaning those up and improving efficiency across each of those major consumer supply chains. Axel Energy, which is spent in our Fund 1 portfolio, we think is a really awesome example of that. So that's a business that connects into consumers' assets. So if it's heat pumps or electric vehicles, and it connects those consumer assets up into the grid. And then when the grid needs energy, it sucks the energy up. And when the grid needs has overcapacity, it pushes it down. And through doing so, it helps to stabilize the grid, which helps to decarbonize and electrify the grid. And at the same time, it puts hundreds of pounds back into the consumer pockets by making sure they're always accessing the cheapest rates. And so that's a sort of, for us, a really great example of like a shared value business. And we're really excited about the power of those business models across those three sectors. And they're just huge opportunities. Trillions of dollars in decarbonization, trillions of dollars in healthcare, and trillions of dollars in inclusive financial services. So we think it's, really exciting time to be investing in those three areas.
Yeah. I mean, you're preaching to the choir here.
Well, yes. And actually, I mean, it's a good point, though, because I think National Green Ventures and a couple of other funds, when we sort of first set up Eka, we really looked at for inspiration. And I think it was only possible to really set up a fund like Eka because of the amazing work that funds like National Green Ventures have done.
You're too kind.
No, but it's true. Like, I think we were like, oh, people are doing this and it's working. It's really exciting.
But genuinely, I feel like the excitement that we've seen in the sort of impact investing space, maybe over the past 5 to 7 years now, there's just so much more of a collaborative nature. So seeing even the reports that BSC has put out where Eka and B2B and many others were involved around sort of impact as a source of value is like hugely promising. And it does make you feel hopeful about the state of the world. So thank you, Camilla. That's super kind. But digging a bit deeper into sort of the three consumer-led megatrends that you talked about, was there anything since Fund 1, since the inception in 2021, essentially, has there been anything that really surprised you in terms of how fast these trends have evolved? Or is there anything that you've realized in coming across the spectrum of deals that you might see at your fund that really you were a bit like, oof, that is a massive sort of step change that we want to dig deeper into?
Yeah, 100%. I mean, I know we were talking about it briefly before. It's been a crazy sort of 5 or 6 years. COVID, the war, like a whole range of different things. I think probably the thing that surprised us is just the acceleration of awareness, both on sort of healthcare with COVID and people taking more responsibility for their own health, and more recently on the sort of energy sort of crisis and the need for security and resiliency and how important energy is in our sort of daily lives. So I think there's been a lot of sort of positive tailwinds for our thesis, and you can see that in the follow-on rate in our sort of portfolio companies. So 70% of the investments we make, when we make them, there's no capital there. So we're the only term sheet. 70% of those companies in Fund 1 have gone on to raise really good follow-on capital from sort of tier 1 commercial institutions, like Index and Excel, and the ratio of follow-on capital is about 1 to 8 for every pound that we've invested into. So I think we're really seeing that like other people and later stage funds have sort of woken up to that opportunity that exists. And then from from a technology perspective, one of the like themes that we're so excited about and has really pulled forward is just what is actually possible, especially in healthcare. So I think when we started investing in healthcare, a lot of what we were seeing was in sort of diagnostics or assistance tools. But those were always tapping into quite a limited spend, and they were like improving healthcare, but they weren't really changing the system. What we've seen in the last couple of years is that AI is getting to a maturity level and the regulators are getting to an understanding level where you can start to treat patients using AI. And
Mm.
that radically changes the economics and the capacity within the healthcare system. We're investors in a business called Flock Health. So Flock Health diagnoses and treats lower back pain care. It's fully regulated. So the same as if you were going to your GP, it's CQC regulated, software as a medical device regulated, but it has abundant capacity where it was being trialled in Cambridge. Cambridge has a 12-week wait list for lower back pain care, and they were able to treat all of the eligible patients. None of those came back into the system, and they reduced the overall wait list by 55%. Those things were not possible 3 or 4 years ago. And so extremely excited about that trend, and we think it's going to happen across all different spaces of healthcare.
And just the huge tangible like positive impact it actually has on people's life is massive when you when you consider that it does lead to better adoption as well, which is
Oh
really
my God, it's amazing. And actually, if you take Flock as an example, I mean, it's really incredible. So they sort of look at the different sort of demographics and the engagement rates by
yeah,
different demographic, and
yeah,
then they compare it to the sort of mainstream system. And what they experienced is some of the hardest to access demographics that don't typically interact with the healthcare system do interact with Flock and have really positive outcomes.
fantastic.
Which it was, yeah, that was one of, I think, when we saw that data, it was one of the things we were most excited about.
Yeah, it does speak volumes about like the sort of design thinking and the approaches of the founders that you're backing as well, which is a nice segue into the next question I have for you. Around sort of what qualities do you actually look for in the founders that you're backing with Eka as well? What are maybe the three main points that really st- stood out from the founders you've backed and from the founders you're seeking?
Yeah, definitely. So it's probably the thing we talk about the most internally. We were really fortunate and early in our career to work with some exceptional founders, and off the back of that, have developed a process that we use to try to understand whether someone has that potential. So we call it a sort of leadership assessment process. It's a founder interview, so 60 to 90 minutes, one-on-one with that founder that John, my business partner, or I do. So we take it really seriously. Then we do something called Hogan, which is a sort of psychometric testing that gives us a sense of strengths, weaknesses, motivations. And then we do extremely detailed referencing as well. And we like to take a minimum of sort of 3 references, but up to 7 or 8 per founder. And what we're really looking for in that is evidence of outlier achievement. And that can be across sort of any walk of life, but we like to see something where you have just massively outcompeted your peer group. And like a really good example of that is there's a founder in our portfolio called Merva, who's the CEO and co-founder of a last mile logistics business called Hive.
Mm,
Extremely difficult, complicated business model. We backed her and her co-founder straight out of university. And when we did this founder assessment, we found out that she had been captain of the under 17 Man City women's football team. She'd
fun.
done exceptionally well academically, and she built an amazing like influencer strategy for her family's sort of takeaway chain, like at the point in time where influencer strategies weren't a huge thing. So we were like, wow, this is someone that's just incredible, leads a team, get loads of things doing, pick up skills really fast. And so that really embodies what we think, how we think about that outlier achievement. And then the second thing is an obsession with learning and development.
Oh yeah.
Yeah, and that is huge for us. We back tons of first-time founders. Most of our bigger outcomes have come from first-time founders, often no management experience, often no business experience. And then a few years later, they're managing hundreds or thousands of people, really complex organizations. And so we're looking for people that just have this like insane capacity to learn and develop and improve themselves and always be thinking about going forward on that. And the one that always stands out the most to me with that is a founder called Timo, who's the CEO and co-founder of Gusto, which is an online grocery business that John and I backed in 2013. He did an executive MBA whilst raising his Series A. He was like, to build this into a big business, leadership is going to be the most important thing. I'm dedicating time to that. He then joined a number of later stage boards, both sort of later stage VC-backed boards and then some public boards as well, because he was like, I need to understand like how I think about 10 years later, 20 years later, and also became a leadership coach. And that type of that's the depth and level of obsession with learning and development that we're really sort of looking for in the founders that we back today.
That's so fascinating. Actually seeing like how much you can also uncover through the process that you might otherwise not actually come across, even especially if there's no online footprint for some of these discoveries as well, which is just
Yeah.
really fascinating.
We love that. It's our favorite part. And I think one of the things is distance traveled, because, I think we're sort of impact investors and I think one of the most interesting things sometimes in those founder interviews is the context, because if you've sort of had a lot of privilege and then you've got a top first, that's really impressive. But if you come from an environment where you've had no support and, maybe you're the first person to go to university and you're funding yourself through it in parallel and you get the top first, then your distance to get there is like, it is really impressive. And when we think about that sort of like outlier achievement in terms of like out competing, like where like your pace, some of those individuals, you see those signs more clearly like through those leadership assessment processes.
Yeah, 100%. And it also feels like it's a more equitable approach to the many ways that deals are actually sourced in the venture capital industry as well, which is really refreshing to hear. So thanks for sharing insights into how you do this. Perhaps for sort of the founders listening in, at what sort of stage do you usually back founders when they come to Eka?
Yeah, it's a great question. Sorry, I should have mentioned that earlier. So we invest at pre-seed and seed. And so we invest in pre-seed often where the founder has some sort of like previous experience that means we think they can get out of the gates faster. And then we invest at seed often when there's a model that we like to see like a little bit more execution into. But we do go really, really, really early. So in Fund 2, we've made 3 investments. So we're at incorporation at the point in time we made those investments.
Yeah. Which, yes, hopefully it also speaks volume around sort of portfolio diversification and how this fund will play out, which is very, very exciting to see. I guess that sort of also, as if I had planned this, nice segue into the next question. If we sort of take a future forward approach, because the sort of state of the world is definitely murky at best, very convoluted, and often I guess we might feel a bit jaded when we sort of think about the state of the world as well, but if we were to take a sort of 10-year future forward looking phase and wonder sort of how Eka's thesis plays out over the next decade, how do you think it will shape the sort of UK startup ecosystem, and where do you feel Eka will play a role in getting to that point?
Yeah, it's a really good question, I guess. What we talk about, which maybe sounds a bit grandiose internally, is we talk about making impact mainstream by delivering outlier returns. And I think when we really think about that, the companies we're backing today, we hope to find the economy in sort of 10 years' time. And we look often at sort of Sequoia and the impact they've had in the US. So 25% of the S&P are Sequoia-backed companies. We would really love it if sort of 25% of the FTSE companies were Eka-backed companies, and that when you wake up every day, you are using products and services that were sort of provided by Eka-backed companies across those sort of 3 main sort of areas. And then from a sort of VC perspective, what we really hope that does is that because it drives such exceptional returns, more capital flows back into the impact market, and more mainstream investors move into the impact market. And in parallel, we continue to see like exceptional founders wanting to build in that space because they know that they can attract the best talent. They know they can build these companies that do define the future of the economy, and they know they're going to be able to access the capital to do that. So we really sort of think about it as a flywheel. We're extremely positive. We talk a lot about abundance. We talked about sort of flock health and this like incredible like increase in capacity in healthcare. We think that's going to happen across nearly every industry. And we think it's funds like yours and like ours that are which are going to sort of make that happen and really define what that economy in the future looks like.
Yeah. Hopefully in 10 years' time, we're back here and seeing 25% or more being the FTSE 500.
Yeah, or more, exactly. We'd definitely be very happy with more as well.
Exciting. I guess coming to the last question for this podcast, and maybe focusing on sort of the founders listening to this episode as well. What is sort of a piece of advice you'd give to any founder looking to build an impact-driven startup and sort of really setting themselves up for success for the future?
Yeah, 100%. I think it's a very basic one. Be ambitious. I think there's truly no limit to what is possible and how big an impact-driven startup can be. And I think really as a founder, setting that ambition level high and being open about it and talking about it and not being ashamed of that is extremely important. I think in the UK, sometimes we can, be a bit embarrassed about having these huge ambitions. We absolutely love it when founders come to us and we're like blown away by that ambition level and their vision of what the future world can look like. Yeah, so that would be my one.
Oh, fantastic. Yeah, yeah. Be ambitious, and which also applies to us. So, yay.
Yeah, yeah.
Let's make that happen, Camilla. Camilla, thank you so, so much for joining us today. It's been super, super interesting to dig deeper into some of the sort of structural shifts you've seen over the years as well, and particularly how it's led to Eka and what hopefully will come in the future, particularly on the FTSE 500 market. So thank you so much for joining us today on Tech for Good with BGB.
No worries. Thank you very much for having me, Dama. Really nice to see you. Exciting to be building together.
Yes, it is. And now on to your dear listeners. If you have suggestions for guests or topics we should be covering on Tech for Good, please do get in touch. And if you're thinking of starting a Tech for Good venture and are looking for investment, don't forget to check out bethelgreenventures.com and eka.vc to see whether we might be able to help. That's it for this week. Thanks so much for listening and goodbye.